Good morning, everybody. This is Matador from freetradingvideos.com. It is Friday, February 1st, 2008. I can't believe January's already over, but so goes the time. Anyway, what I wanted to do is create a video series based on chart patterns and maybe elaborate on some of the things that are in our chart school. So I'm going to browse there in case you haven't been there before. But if you go to Google, type in free trading videos. This will be the #1 on the list here, which is excellent. And the front page will pop up, and there'll be several modules in here. One would be the free trading videos section itself. If you click on that, of course, you can see all the many different videos that people have posted here. Pretty awesome. There's also Talk with Traders, where if you went in and registered, right, no credit card or anything like that, you just put a username and password in, create one, you'll be able to talk with other people and post things in there. It's kind of exploding right now, which is beautiful to see. There's also the chart school, which we're going to go over, and there's even a little trading quiz, which we're going to change out every now and then. So under the chart school, there are all the bullish patterns on the left and the bearish ones on the right. Of course, there are many, many more patterns than this, but there's a very, very long list through here. And it actually goes all the way down. It's pretty awesome. So we're going to actually start with the first one. So the pullback buy. Click on that. You'll see a picture of that. And there's a couple of examples. Right? So you can click on the different examples. And there's some words down here as well. So a security, an underlying asset that is in an uptrend. So we have higher highs and higher lows being formed. At least one set of those. Anytime that stock pulls back, most typically after many, many bars up in a row, that becomes more of a necessity for the people on the long side who are positioned well to start taking profits. That can drive the stock price down. And if it's in an orderly fashion, in other words, they're not dramatically selling and selling quickly and trying to get out, they may want to own more of it at some point, or at least they're holding on to some portion of their gains. All right, their shares are still intact, at least partly. At that same time, other people are looking to buy into that stock, all right, if it's a nice orderly pullback. Right? Again, not a lot of high volume, not a lot of large red bars in this scenario, and the power of that upside reversal after a pullback can be greater after a strong and steady uptrend due to the possible increase of underlying support. Again, anybody who's not positioned well, who's getting hurt, will want to minimize their pain by buying to cover. On the short side, right? So think about that. If you're getting hurt and the market's going up and somebody has failed to keep a protective stop, that's a bit painful. So they will look to buy to cover when the stock comes back at all to let them out after a beautiful run up and profit taking occurs. Right? Again, if that's a nice orderly pullback, that's going to up the chances that it's easier to make my way back through all this overhead resistance, typically at the prior swing high. Right? And when that prior swing high, right, is also the highest it's ever been, right, that's going to be powerful, because once it can get past that, if it does, then it's going to be free and clear to go. There won't be any price resistance in the past. And of course, you'd have to go back and look at that in time to find that out. Sometimes a stock will run up to prior resistance, stall briefly, and work its way out of that. That would be a nice ascending triangle. Sometimes the stock doesn't pull back at all like this, and it just chops around on its high. That would be a high base. And we'll go through and talk about how all these patterns are basically mirrors of each other, little shadows of each other, and why some might be considered to be stronger than others. And that would be a pretty nice way to go through this chart school. Second example, same kind of thing. We have the 20 MA rising nicely, higher highs and higher lows. This is an incredible run after this little base. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 bars in a row. Almost unheard of. Most stocks move in 2 to 6 bar moves. You can check that out before profit taking occurs. And just a very, very small orderly pullback. So even the people who are making a lot of money on the way up aren't willing to sell out of their position. In addition, the people who are hurt begin to buy to cover quickly, right? And they're holding that up. Everybody thinks it's going to go higher. Doesn't mean it can't fail in the future. It just means right now, where this circle is, the preponderance of people, if you'll excuse the alliteration, think the market's going to go up. So that's the sentiment read for that stock at that moment. And it takes just a couple of days, it pops out of that, and beautiful move. We would already be in this trade from this pullback back here. Assuming this is not news or earnings, it would have been okay to hold through this, but this is some external catalyst, and I would have to know what that was and try not to hold into that. All right, if I am going to hold through that on purpose, then I'm probably going to buy some protection in the form of a put. Right, make it a synthetic call or a married put, whatever you want to call it. They're the same thing, and protect myself with a nice hedge. All right, so a couple ways to do that, and this is a nice ride. So we'll take it, and sometimes that's exactly what a pullback buy can deliver for us. So thank you for joining me on this little example, hopefully being able to elaborate on many of the different patterns here in the chart school, and look for my subsequent videos. Thank you. Have a great day and a great weekend.